Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good As Gold. So over the last week, gold's been kind of choppy with no clear direction. There's a lot happening, including strong US data, fast folks sounding more hawkish, and all these geopolitical tensions. Everyone's eye are on this Friday's US PCE inflation release for some hints on where the gold might head next. So here's a brief rundown of the gold against US dollar daily chart. Last Wednesday, gold prices continued to drop, slipping below the downward trend line that's been in place since the end of last year. Even though gold notched back above this trend line later in the week, it couldn't shake off the overall drop, ending the week down by about 1%. As of this week, gold has been hovering in a tight range between $20.17 and $20.37. Looking at support, there's a pretty solid area between $20.16 and $20.22, and it represents both the intraday lows tested several times in January and the 23.6% Fibonacci retracement level of the downtrend since late December. And if gold drops further, the $2,000 mark could be the next big stop. And on the flip side, last week's high at 2040 can be seen as a first resistance, while breaking above the 61.8% retracement level of the year-end pullback at $20.55 mark could signal more gains ahead. So what's stirring up all these seesaw actions in gold? First up, the Fed's interest rate moves and what traders are betting on for future rate cuts are big deals. The recent US data like the positively skewed retail sales in December and also sturdy job markets with the latest weekly initial jobless claims dropping to a 16-month low suggests the economy is holding up pretty well. And this has also got people thinking the Fed might delay those rate cuts a bit, even though the latest Michigan consumer sentiment is looking up and inflation expectations are cooling off. The Fed folks are maintaining their hawkish remarks and hinting that Fed rate cuts might wait until later this year. The US 2-year Treasury yield is below 4.4% at the moment, and the real rate is around 1.82%. While both are below historical highs, they don't negate the widespread expectation of strengthened dollar if the first rate cut is delayed. Currently, the market sees only about a 40% chance of a Fed rate cut in March, meaning high interest rates might linger for a longer time, increasing the opportunity cost of holding gold and thereby reducing its appeal. And another thing shaking things up is the geopolitical drama, with the US cautioning ships away from the southern Red Sea and Shell halting navigation there. It's clear there's a lot of tension in the area. Additionally, the recent joint US-UK strikes on Houthi militant missile bases suggests a potential escalation of the conflict. At the same time, North Korea's latest move to abolish agencies responsible for the inter-Korean affair and label South Korea as the enemy number one is adding more heat to the mix. So this kind of global tensions usually make gold more attractive as a safe bet. In the long term, we actually still believe the Fed might cut rates sooner to ease that pressure, but it's not actually a sure thing and it's more of a background factor of gold. So in a nutshell, gold's in a bit of holding pattern right now. The Fed's next moves and the US economy's health are big drivers. Geopolitical risks could push gold up, but only if they really ramp up. Gold, including the precious metals in general, is more likely to maintain a defensive or, I would say, range-bound trading pattern in the short term. Beside the Red Sea situation, the week's release of the US PCE inflation, as we've mentioned above, could significantly impact gold's next move. The median estimate forecasts the headline PCE quarter-over-quarter growth at 0.2%, with a year-over-year increase remaining at 2.6%. Core PCE is expected at 0.2% quarter-over-quarter and 3% yearly, with the latter's previous value at 3.2%. If the data is hotter than expected, it could increase the likelihood of the Fed delaying rate cuts, boosting the dollar and pressuring gold prices. So that's pretty much about this week. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!